Well, it's a great day of trade. We were talking about in the morning about the possibilities of the risk being on the upside, and I think we're seeing signs of that for sure because we are up 1.5%. Remember, as I've been now sounding like a broken record for the last few days, we are closer to the Fed rate action than we were last week, and I think that is showing in the way the markets have done today, doing really well. I wonder if Europe, which was okay yesterday, is also doing well. If we can just pull up Europe and just see whether the global markets are participating, 0.25%, nothing too dramatic. But remember, we have 2 days of a catch-up to do to what the Asian screen did. And I think hence, this 1.5% doesn't seem quite unjustified, to be very honest. This is pretty much what I've been talking about on the trade setup, really. Bring up the heat map, and I'll talk about the large caps and then hand it over to Agam for what's happening at the broader end of the spectrum. Just look at the quantum of green on the screen. Even HDFC Life has turned into the green. The only sulking spot is Divi's because of a very idiosyncratic piece of news to itself. Was down 4% day before and down about 0.5% today. But just look at the gains. IT had so many short positions built in, and Nifty IT has done remarkably well today. Wipro, Techem, LTI, TCS, HCL Tech. It's across the board. I think that is that one sector which is pulled up. And then banks are not far behind, by the way, because sure, HDFC Bank may not be in the top 20 names, but look at ICICI Bank piling on the gains. There is strength in Kotak Bank, so that's doing okay. And there's strength in IndusInd too, so that's done well. And then the infra spacing names, Adani Port, Hindalco, Adani Enterprises. There is some strength in Tata Steel and some of the metals as well, globally exposed names. So all in all, looking very solid at the large cap end of the market. Agam, I wonder if the derivative positions or the broader end of the market action tells you the same about the mid caps.
Well, Niraj, they're certainly moving in tandem with the benchmarks, and I know that benchmarks have actually positively surprised in the last couple of hours of trade. But, the broader market indices are not too far behind. In fact, they are advancing and outperforming by just a tad bit. So, 1.7% advance for the mid-cap index, about 1.6% advance for the small-cap index. And even in there, we have plenty of gainers. So, notwithstanding the kind of traction that we're seeing in the IT space, there are also a lot of counters out there which are moving and advancing beyond IT. So something like a CDSL, that's up around 7.7%. We have gains in, RHI Magnesita, and Nippon Life is now picking up as well. That's one is also up around 1.7%. And Piramal Enterprises it seems like it's just turning around quite a bit, because remember, Piramal Enterprises was down nearly 10.5% on Wednesday, and now it is up as much as 6.7% right now. And naturally, we will have to talk about the IT space, because it's not just the IT frontline names, but something like a Zensar Technologies is now advancing by around 8%, followed by Emphasis up 7%, and Birlasoft, something like, and even L&T Tech is up and about. So plenty of counters out there to keep an eye on when it comes to those showing strength. It does seem like a lot of those counters who had seen momentum are resuming their upward activity. And today is perhaps one of those days where there's been typical of that, trend come through. Hindustan Zinc, on the other hand, is losing out around nearly 8%. This one is under pressure, of course, because, of the move its parent has made. And the floor price, of course, is at about little less than 500 rupees per share, which means that this move perhaps was on expected lines. Ratan India, Max Financial, Varun Beverages also under a little bit of pressure. But if you consider the advanced decline ratio on something like the NSE 500, there you have about nearly 10 to 11 advances for just one loser. And as you can see on the NSE on an overall basis too, it's been a fairly favorable one for 4 gainers against 1 loser. So all in all, in general, turning out to be a great Friday afternoon, Niraj.
Let's ask if our guests are as excited about it. Brijesh Singh, opulent investments on the charts and the fundamentals. Dipan Mehta of Elixir Equities. Gentlemen, both of you, thanks so much for taking the time out. Dipan, the earnings season gone by, not throwing up the best of outcomes, but not that it was expected, because it was a quarter plagued with less activity per se. Are you constructive now that we are closer to the Fed rate cut cycle, or are you still biding your time?
Good afternoon, Niraj, and thank you for having me on your show. I'll go with the latter, still biding our time. And our view remains cautious at this point of time. As regards global markets, global economy, I think there's still a lot of confusion. On one hand, markets rally when they expect rate cut, but when actually the economy starts to deteriorate, they worry about maybe a recession over there. So I think global markets, global economy are throwing a lot of mixed signals. And within India also, I think valuations are really, I think, at an extended level and does call for caution. I don't know when it will come, when a correction will come, but at least we are not participating at these elevated levels.
Brijesh, welcome to the show. You know, I'm looking at the Nifty movements since the 5th of August, and I take that because on the 5th of August, we actually saw a sharp drop. I'm looking at the Nifty now at around 24,500. That's where its underlying is right now. And, you know, it seems like we're trying to move over that mark. We're trying to move over the 24,550, 560 odd mark. What's your sense now as far as Nifty is concerned? Would you perhaps go long on the indices at this point in time, on this specific index at this point in time?
So good afternoon, Agam. See, first of all, the trend now look little bit positive. Why I am saying so? If we consider the previous swing high, that is a 52-week high, and you know, like 25,078 was the high, and from there we got corrected and we made a low of 23,893. Now taking this 2 point and draw a Fibonacci retracement. So Nifty is trading in the 2 range of Fibonacci, that is 23.6% on downside, which has a value of say 24,173. So in precisely we can say that it is not breaking 24,000 or 24,100 on the downside. Now 50% retracement value, which comes around 24,486. So on the higher side, it is finding a resistance at say 24,500 or say 24,500, and still is been, you know, roaming in this range. So the more time it passes in this range, that would be good for the market. If we look out the oscillator front, the plus point is they are making the higher low. That is a positive sign, and the price has been consolidating in this range. So any positive news coming from the global or coming from our economic front, which would be giving push to the index, and we might break the range which has been trading right now, say 24,000 or 24,100 on downside, 24,500 on the higher side. But again, the 61.8% retracement value comes at around 24,625. So I feel that first level of, you know, supply would be coming at that range of say 24,625. But I feel that this might be broken and we might swing on the higher side. So at the present, definitely things are on a positive side, keeping this in mind the range which I've talked about. So present rate, I'm talking about the Nifty spot, taking that thing 24,500 or say 24,450 and around. If it comes, then one can take a buy side in indices of Nifty, and with the stop loss of 24,380 and play for the first hurdle which I talked about, 24,620 around. But I feel that range will be broken and we might try to retest 24,800. So right now things are looking positive on the Nifty front.
Okay. In light of that, what are the stock ideas for this afternoon, Brijesh?
So, Niraj, I have 3 calls, 3 on the buy side. So I'll start first with Nippon India. Now, if we look out in today's chart, you know, on an hourly or on a 4-hourly chart, it has broken the previous swing high, and it has been trading above that, and with the increasing volume, somewhere around 680 around the stock has been trading. So one can take a buy call in it without the present or any dip, keeping a stop loss of 665 and play for the target of 710, and the time frame to hold would be at least for 3 to 4 trading sessions. Another buy call would be Ashok Leyland. A same chart pattern, you know, it has made a base at around 240 around, and the minor swing was somewhere around where the resistance was lying. I was 252, 253. Now today that range has been broken. We are inching towards the higher side. So present rate can be used to go long. 254 around the stock has been trading, keeping a stop loss of 246, play for the target of 267. And third counter again on the buy side would be IEX. Now IEX, we see first of all the higher tops and higher bottom formation has been on the hourly as well as 4-hourly chart. The previous swing high, that is the 52-week at 200 around, the stock made a high of that and it made a low of 184, and it was a swing low. It was some sort of double formation. So that is a confirmation that the selling has been observed, and again the fresh rally has been seen on the chart. So 194 around the stock has been trading. Present rate can be used to go long with the stop loss of 185. Play for the target of 205. Target can be extended to the level of 212 also, but the first level to what will be 205. And again the time frame would be same, 3 to 4 trading sessions.
Dipan, coming on the IT sector, what we've seen is that, it usually tends to, move in tandem with the sentiment in the US markets. At least that's been the trend. The first quarter results weren't amazing, but they weren't terrible either. And the commentary seems to suggest that perhaps there could be positive news flow, later down the line, perhaps in the third and the fourth quarter. What's your assessment on the sector, and what's the way ahead?
Yeah, I think that your assessment is correct, that the sector holds promise because of artificial intelligence and cloud, and overall when Nasdaq does well, the sentiment improves in those stocks, and companies are sitting on very good order book or contract position, but execution is falling a bit short, and valuations also are reasonable compared to rest of the market and the potential of the industry to grow. So from that point of view, yes, one should intuitively be overweight on IT. But I was personally very disappointed with the numbers which came through. And I'm not very clear whether this artificial intelligence is going to be a big wave for the IT industry. The verdict is still awaited on that concept, whether it is on the likes of Y2K or internet or even remote desktop, remote infrastructure management. Those were big trends in IT, which were like, billions of dollars are added to the value of these companies. One needs to wait and see whether artificial intelligence falls in the same bracket. So from that point of view, I just want to adopt a wait and watch as far as software stocks are also concerned. And, once we see a solid uptick, solid uptick mean kind of double-digit type of growth rates year on year, that may be a good entry point. No doubt stock prices may have rallied a little bit, but then at least the cycle would have resumed. And then this upswing in tech spending, that cycle usually lasts for 2-3 years or so. So I would say that for the present, it's on a watch mode, but let's see 2-3 quarters how they play out. And if we are seeing solid growth in volume and top line, then that may be a good, level of good entry level for investors on a long-term basis.
Okay, that's the word on some of the tech companies. The stocks have done really, really well. Brijesh, quick 30-second view. Are you buying into any of the or trading any of the IT names? Sorry if you already gave an idea, but if not, any large cap IT name?
Tech Mahindra look good on the chart. The stock has broken its previous swing high. 52-week high today has been made. So if someone wants to go long, present rate can be used to go long. 1577 around the stock has been quoting, keeping a strict stop loss of 1520. Play for the target of 1660 to 1665.
The stock of the day though has to be Ola Electric, because the stock has soared to another another high level, and in fact up about 20% on an upper circuit in trade after entering into electric motorbike segment amongst a slew of launches as well. Now, before I get to a conversation that our colleague Rishabh had with Bhavish Agarwal, Dipan Mehta, it's a stock that the naysayers say was expensive at the IPO price and has now become even more expensive, right? Nearly double, or if not double, at least gone 75% from that issue price of 76. What explains this frenzy for Ola?
2 words only: bull market. This is a bull market. Anything can happen over here. And, stocks have no highs or levels like that. Ola Electric can go to even 200 rupees, So it's just liquidity pouring into the stock. It's not fundamentals that play over here. And such kind of rally cannot be justified on a fundamental basis. But look, this is what happens when there is euphoria, when there is concentrated buying, when there is few investors chasing a stock. This is what happens. The liquidity goes off from the counter, and then even a little bit of buying can take the stock prices higher.
If you had bought into this IPO, Dipan, and very well it could go to 200, but if left to you, if you had gotten it, would you sell into this uptick right now?
I'll give a pass on that one because I haven't got any allocation or I haven't invested. But look, all these companies, even the earlier round of new age companies which went public, they had the similar euphoric type of listing. Then 3-4 quarters, 1 year down the line, there was great disappointment. And now I think they have bottomed out and starting to rally, the likes of, say, Zomato or Paytm, Nykaa. These companies only had a steep correction as well after a very solid listing. I suspect something similar can happen to Ola Electric as well. That right now I think it's just the euphoria around a good listing. But let 2-3 quarters come. It's not that easy for the company to just go from such a huge loss to profitability. Eventually, analysts will start valuing this business on its growth potential, on its profitability. And unlike some of the other new age businesses, the ones which I named, it has a very high component of variable expenditure. So it's just that the turnover may keep on rising. Doesn't mean that the profitability also will improve significantly because a lot of the costs are variable in nature. So I would say that at least I wouldn't advise buying at these levels. If you got an IPO listing, I mean, it's your call whether you made enough, whether you have more appetite for risk or it's better to book profit. That's a difficult one to answer because, again, the stock can rally by another 20% tomorrow. And then you may feel a bit disappointed that you have sold out early because it's not going up on fundamental basis at all.
Right, absolutely. But, talking about Ola Electric, in the latest update that we have, that is entering into the electric motorbike segment, among a slew of launches from, Tritrim. And our colleague Risha Bhatnagar spoke to the Ola founder Bhavish Agarwal to dissect the rationale behind the new announcements and more. Listen in.
We announced our first ever listed company earnings yesterday, and the key highlight was that our automotive segment was almost EBITDA positive. We were negative 2% on EBITDA. And that is actually because there was about a 23 odd crore PLI reversal that we had to take in this quarter given the government policy change. Had that not happened, we were actually EBITDA neutral almost. So the automotive segment, many people were questioning earlier, is EVs a sustainable business or not? We, I think, have proven that EVs is a sustainable business. We are EBITDA neutral. And this is not the end. We have a lot of journey ahead to improving gross margins and through operating leverage, improving EBITDA margins. Now let's come to the bike. The bike is built on the same platform as the scooter. So as we bring the bike to scale over the course of the next couple of quarters, it's going to bring more volumes on the same factory, same investments, and hence more margins, more operating leverage. The bikes are going to start with the same gross margin where the scooter is today, not where the scooter was 3 years ago, because the same platform, same supply chain.
In terms of market share, Bhavish, what sort of market share are you seeking in the next year, 2 years, 3 years?
We don't seek market share, Rishabh. We seek consumer love, and we focus on building disruptive products which really capture consumers' imagination. And that's what you see with our bikes here today. We've launched 3 bikes, not one but 3 bikes. The whole Roadster series, Roadster Pro, Roadster and Roadster X, from 75,000 rupees up to 2.5 lakh rupees. For whatever customer segment, whatever price point they like, they can choose their product. So we feel very excited. Electrification in bikes will be quite fast, given the market is already conditioned to EVs compared to 3 years ago. And we hope the consumers adopt our products. And if you look at the marketplace of EVs and motorbikes, actually koi competition hai nahi zyada. So we are the vanguard of this EV frontier in motorbikes.
Well, that's Bhavish Agarwal telling us about the latest with respect to Ola. But on that note, it's time for a quick break. On the other side, we continue to get you the latest with respect to markets. Back in just a bit.
All right, back with India Market Close right here on NDTV Profit. Agam steps off from the chair next to me and goes onto the wall to give us a sense of the Q1 scorecard as we officially wrapped off the earnings season as of 14th or yesterday. Agam, how did we shape up?
Well, it wasn't a bad quarter, Niraj, to be honest. And at least as far as the Nifty 50 is concerned, I think the biggest takeaway is that the street got it significantly, they got it right on a significantly higher number as compared to the previous quarter. But let's also look at the beats and the misses. So I'm going to start off with exactly that. Around last quarter, we just had 20 in lines, and this time around we have more than half the earnings on the Nifty 50 is where the street got it pat down to the very last bit, which means that about 27 were in line. However, there were more misses than beats as compared to the previous quarter, as you can see on your screen there. In Q4, 21 beats, but this time around less about half, so 11. So I guess that's the big takeaway. But in general, overall, in terms of the numbers here and there wasn't much to speak for. The big takeaway, of course, was the fact that the street could gauge as to how the earnings could be in the first quarter. Now, I'm going to talk about some of your relatively bigger sectors and how things have panned out there as well with respect to expectations. So financial services were the one which had the most amount of inline earnings. And, in terms of misses, FMCG and metals and mining saw the most amount of misses coming through on an absolute number basis. Of course, financial services is a very large sector, so we did have about 3 misses there as well. But save for that, in terms of those stocks which actually positively surprised the street, there weren't too many. There were a handful of Adani Group companies which actually did well and did come ahead of expectations. Besides that, as you can see, we had Eicher Motors and Maruti Suzuki positively surprise the street as well, along with Bharti Airtel. And this was, of course, while the sentiment was only beginning to improve for the entire telecommunications sector. What really missed out this time around was something like a Tata Steel and Hindalco, in fact, at the bottom of this pyramid, along with GSW Steel. So clearly, metals and mining were where we did see some amount of, weakness coming in as far as the first quarter is concerned. And finally, to take stock of where the performance has been the most. So telecommunications clearly stands out here. Well, I'm going to talk about Bharti Airtel specifically because that's the only, a Nifty 50 company listed, and we don't have, or rather we don't consider data from Reliance Jio. So naturally, we had a positive cues there. Services, of course, did well as well. And on the other hand, we didn't have as much of traction when it comes to the auto sector. But say for these 3 sectors, all in all, it was, fairly mixed and fairly in line. So not much to seek for. I guess the big takeaway was that this quarter was where the street got their estimates down to pat, and it was largely in line with expectations. And remember that we didn't see too much of a correction, even as we saw a lot of these expectations being largely factored in. So that, of course, is always a big positive.
Okay. Well, I'm sure Agam has a lot of questions for that on that to our guests. Thanks, Agam, for that. Dipan, can I ask you about 1 or 2 of these pockets before we thank you? Let's say telecom. We know that there is an impact of the hike. If India's inflation can feel it, the P&Ls of the telecom companies will certainly feel it. There might be more in store too. Pocket worth looking at, or because you're cautious at large, you would avoid this as well?
See, I think that telecom is fast reaching like a mature industry. And no doubt, I think the ARPUs have some way to go higher and higher as well. But a lot of it has got captured in the stock price as well. The only really listed company, Bharti Airtel standalone, is trading at expensive P multiples. And you may factor in increases in the tariffs for the next 2-3 years or so. But that also, I think, has got captured in the stock price. So our view is a bit neutral to negative on telecom as well. But, this is a bull market, and any positive news is taking stock prices higher. So we saw what happened when these companies announced tariff increases. There was a spike in stock prices. Who knows, a few months down the line, if there are further tariff increases, then there could be, a further spike in stock prices. So, P multiples can expand irrationally also. And that's something that we need to account for. But on a fundamental basis, considering the underlying volume growth and the traffic growth for telecom companies, I think paying such expensive P multiples doesn't provide the best of comfort. Even the risk return profile is not in your favor.
All right. Maybe I can actually take this up with Brijesh as well. Brijesh, your view on something like a Vodafone idea, which has been relatively choppy, and in comparison, your view on Bharti Airtel. What are the technicals telling you?
I was just watching this Vodafone idea chart, the high of 19 rupees 18 paisa to the low of 14 rupees 57 paisa. It's been trading in the range of 16 rupees 34, 35 paisa on the higher side, followed by 15 rupees 7 paisa on the downside. So it's still nothing much, on the chart. From even the strength is not that much, giving a confirmation that we can see upside towards the level of 17 or 18. So Vodafone, I'll say that is when such thing been there on the stocks, buy near the lower band of the range, sell near the higher band. But if you look at the Bharti Airtel chart comparatively to Idea, still the height of higher bottom formation on the charts giving a positive sign. That is one point. Second point is trading near the previous swing high. So it looked a little bit promising. 1,480 around the stock has been trading. So as a risk reward ratio has been considered, don't look out to buy here, somewhere around 20-30 rupees downside if it comes. So 1460 or 1455 around when it trades, look out to buy at that range with a stop loss of 1420 as a stop loss, and then play for the target of 1525, 1530 odd level. So another 20-30 rupee downside if it comes, then the risk reward ratio would be in the favor of buying side.
Right. Dipan, a final question from my end before we let you go. You spoke about the current markets being a function of liquidity, and a lot of strength is on account of the kind of flows that have been slushing through. Are there pockets in the market at the moment which still need to catch up? If so, what could you have possibly identified?
Oh, that's a tough one, because if you generally feel the market is expensive at this point of time, there are hardly any places that one can hide, except if you're compromising on the corporate governance standards or the quality of growth rates. But, if I were to say one sector which holds promise and which is reasonably valued, I would say certainly it is pharmaceuticals. And I was quite impressed with the numbers which came through across the board from large as well as mid-cap pharma companies. And these companies, I think, are entering into a new growth phase. The valuations are still reasonable. And I think that next 2-3 years, they can sustain high teens type of growth rates by expanding into US generics, rest of the world, and even the Indian domestic market. And in a way, pharmaceutical is a defensive industry. So if economies globally were to, slightly turn for the negative, or in India also, we were to have a slightly cyclical down move in the economy and infrastructure, capital goods and industrials were to take a bit of a slowdown, then I think some amount of stability in the portfolio can be gathered through buying pharmaceutical companies. You can buy them as a basket, buy the large cap ones, but I think that is one sector we'd like to be a bit overweight in.
Okay. Dipan, we'll let you go on that note. Thanks so much for that. Really appreciate your time. Have a great weekend. Brijesh, stay on. So much more to talk about. We take a quick break. And before we take that break, though, or as we take that break, let's hear about a sector which Sumit Jain wanted to highlight. Of course, thinks about the demand for flights and aircrafts continuing to surge and whether that makes it a time ripe for the aviation industry to take a flight. Hear out what Sumit Jain, who's of course from ASK Investment Managers and Overseas Equities worth 35,000 crores, has to say.
See, airports clearly will make money over a long period, right? But do we have enough listed players on the airport side? Pretty few. Even on the airline side, we just have very few listed players, right? Having said that, we will see more number of airports getting listed over a period. Not sure of will we see more number of airlines getting listed or not, right? Having said that, see, on the airlines, clearly world is short of aircrafts,
Right.
The ability of both the large aircraft manufacturer to kind of deliver aircrafts on time is challenged. So those players which have solid balance sheet will stand a better chance to actually increase their fleet sizes.
Right.
They stand a better chance to supply. Right? Demand should continue till the time prices don't go out of whack. Right. So will there be some level of elasticity? There will be, right? And we'll have to see where this equilibrium lies. But will we see airline traffic increasing at a rapid pace? We'll certainly see that. And will that be catered by few players? It will be catered by few players. Right? So will profit pool keep going up? If one were to ignore the volatility of external varieties that one can see. For example, crude plays an important role for these companies, right? So if crude is under check, currency is under check, we should see a decent profit compounding from these businesses.
Welcome back to India Market Close. Let's take a look at how the futures and options space is panning out this Friday afternoon. It's turning out to be a very strong afternoon indeed for the Nifty, which is up by around 1.5%, 1.6% to be precise. Very little change in open interest, perhaps on expected lines because we are moving into a weekend. And in terms of the Bank Nifty too, well, we have seen a lot of strength on account of ICICI Bank and Axis Bank. We're looking at a whopping 1.6% advance there as well, but a significant amount of unwinding coming through. Remember, there were a lot of shorts earlier in the system from the mark of 51,000 and 51,500. And I reckon that is being covered at the moment since we are now have breached 50,500 as well. Well, in terms of your overall options market, because of the fact that we saw the Nifty move higher, we've seen a significant unwinding around the 24,500, 600 and 700 calls, and a lot more writing coming through, and in strikes slightly below that by about a difference of 200. And again, because of the kind of strength that we've seen, because the Nifty is 1.5% higher at the moment, is the reason why we're seeing writing activity in put return. Talking about stocks, I'm sure there'll be plenty more which are looking at advances. MCX showing a lot of strength, as is the case for Emphasis as well. Of course, a lot of companies from the IT sector are doing well today. Max Financial, one of those exceptions today, were declining for now. And Balrampur Chini, of course, looking at longs too, along with Ashok Leyland. And among others, of course, we're also keeping an eye on something like a Piramal Enterprises, which seems like it's doing a complete U-turn from Wednesday. PFC, NMDC, ICICI Bank, all of them looking at a bout of short covering. But on that note, we have Vineet Bolinchkar of Ventura, who's joining us on the show right now. Vineet, good afternoon. Thank you so much for joining in. Vineet, much has been spoken about Ola Electric today. But if I were to juxtapose Ola Electric with respect to the other two-wheeler companies which are listed in India, how would you actually take and assess this sector now, and have things changed dramatically now that, well, we have a new entrant which is specifically from the electric space?
See, two things are there, that EV market share is going to increase, but it is growing at a very snail pace, not as expected. But Ola, on the other hand, has boosted its market share from about 40% to now 49% for this current quarter. So, we can see that the thrust is there and they're doing all the right things. Secondly, they've also got a PLI for their battery. And with most of the components being manufactured in-house, I think, it could be one of the best places to invest in from the point of view that two-wheelers, tend to lead the market aggressively. And if you see, our EV penetration is very low. And over the next 5 years, even if you assume a conservative penetration ratio of about 40%, the addressable market, which is about 1.7 crore two-wheelers growing at 5%, becomes very significant. So we are looking at potentially 75 to 80 lakh vehicles that can be all powered by electric. And there are going to be 4 to 5 incumbents in this. And if you think that they have competitive market shares, even at 20-25% market share, Ola will definitely look cheap, given the fact that it has the battery backward integration built in. So long term, great stock to be in. Right now, it may seem optically expensive, but the market is building in the PLI benefits as well as the fact that it has its own battery, which is the main component of an EV.
If you had to bet on one stock and completely unconnected, if you will, or maybe a sliver of connection, which is technology, between an Ola Electric or a Zomato or a PB FinTech, I know I'm comparing apples and oranges, but I'm using technology as the barometer to bring in out here. And if you had money for only one stock, or if you're an investor who believes in sizing up bets in a meaningful way in one stock, which one amongst the newly listed tech-enabled names would you build out a position?
I think I would go with Paytm. If you see from Jan till the present date, whatever disruption happened after the RBI struck them is the fact that their business is back to an index of 97 if it were 100 prior to what the company was doing before RBI disruption happened. Now, if you just step back a bit and take a bird's eye view of what businesses they are doing, or they were doing, and what they're doing now, you will find that they do not have the payments bank with them right now, although they have the license and they can monetize it. Two, they've stopped the wallet, they've stopped BNPL lending, and they've stopped a particular category of consumer spend, that is, housing rent paid on Paytm. Now, all these three are not barred by RBI. So only as a matter of caution, they've terminated these three services, and they can come back later on. But the most important thing is that the entire business keeps growing. And I think they've stabilized quite a bit. We expect the stock, as they've guided, to achieve EBITDA profitability before ESOPs by the fourth quarter of this year, and become PAT positive by FY27. So there is only a delay of 1 year from what we were projecting since the IPO came out. So I think the company is very much on the growth track, just like Zomato was. And once the profitability is visible, then the re-rating of the stock will start. So we think that just like Zomato has built credibility over a period of time from being a naysayer stock, I think Paytm is following a similar trajectory.
Vineet, if I can take up one more question also on the oil and gas space. Of late, we saw ONGC and Oil India surge. Of course, a lot of that had to do with the change in the underlying crude as well. But there are several other factors which are also playing in favor of the sector in general. One of them, of course, being that the new wells will have a pricing premium of 20% coming through. What's your stance on some of these, exploration companies going in?
So, I believe that the entire fossil fuel energy pack is up for a re-rating. If you take the case of oil and ONGC, there are going to be new discoveries that are being added on. Gas is also getting in a premium. And if Russia has stopped production of gasoline from September through December. So we are going to see a lot of demand for these products coming through. So gas will be at a premium. LNG prices will also go up. So I think ONGC and oil will benefit from that. Also, your HP, BP, IOC and GAIL will benefit from the repricing of the tariffs once the GST meets. And we think that these stocks are at single P's, energy deficient globe. They are bound to get re-rated.
Okay. Well, Brijesh, any of these stocks? GAIL is up 2.5% today, 232 and counting. ONGC is not had a bad run. Are you buying any of them?
So Niraj, I was looking for some sort of BTST. Even if someone wants to play for a short term, also one can look. So if I talk about say for a BTST point of view, GAIL looked better. 232 around with a stop loss of 227, play for the target of 240, 42 around. If someone wants to play for a short term, then look out MGL gas. MGL gas charts look promising. For a short term, it's been trading at 1819 around, 1819 around. So if someone wants to go for a short term, look out to buy at the present rate. One can keep stop loss at 1770 around or below that level. And on the higher side, if I talk about the stock has a potential to go and trade around 2000 marks also, but that would be taking time, at least if someone has a view of 2 to 3 weeks.
Well, sharp up moves there. So watch out for the oil and gas space and watch out for the two-wheeler space. When you speak of two-wheeler space, is there better value to be found in electric vehicles or petrol and diesel space? Agam, do you own an EV bike or a petrol bike or none?
No, not bikes in any case.
Okay, if you had to buy a two-wheeler.
Yeah, I guess it will be electric now, for sure, yes.
Okay, so let's do this. Let's ask our two colleagues out here.
Yes.
What are they batting for?
Absolutely, yes, yeah.
So, Mihika and Puneet, EVs or ICE? Who wants to start first?
Well, I think we'll just, look at why are we doing this topic is, of course, the recent listing of Ola Electric, 75% up in just the last 7 days of trading. But what could be one of the key benefits which will drive the stock as well as other stocks that are there in the EV space? Let's look at first, for EV specifically is, of course, the cost efficiency. When you look at, the cost per unit, now there's only 10 rupees per unit of electricity cost and every battery has 5 units. So that roughly comes to a full charge having at just 50 rupees. I'll spare you the math. The final total, if you look at the cost per kilometer for EVs, just comes at 0.25 rupees per kilometer versus comparatively of 2 rupees for ICE going forward as well. Now, of course, these are industry reports which are standardizing across models as well as companies, and over the long term of 5 years of owning a particular EV bike or a scooter going forward as well, that is the key benefit of roughly around 30 to 40,000 is that we've seen. Now, these are from multiple brokerages such as Nomura as well as industry reports that calculate the per cost kilometer of EVs as well as ICE scooters. The second key point is, of course, annual savings that we are calculating of about 25,000 per annum. Over the life of the vehicle, we spend approximately around 3 to 4 lakh rupees on cost of petrol or the energy that you're consuming. That specifically gets triggered and saved when you purchase an electric vehicle as well. But Mihika, you have some calculations for ICE as well. Why don't you walk us through that?
You spoke about this, but I'm speaking about the overall average manufacturing cost. Now, obviously, this is a standardized but the initial cost to purchase an EV scooter is still higher, like you see here, 1.23 lakhs versus an average cost of 1.01 lakhs for petrol or diesel scooters. And there's also something about a resale value worry that is among investors. If you had to go and sell your petrol or diesel bikes after 4 years of use, you will still get some of your money back. But these concerns are prevalent for EV scooter users. Another point is established infrastructure. Now, infrastructure for IC scooters, which is petrol and diesel scooters, is well established in India, but it is a key challenge for EVs. Customers face also range anxiety due to the charging infra concerns. Over 90,000 petrol pumps in India currently, more added each year, whereas the EV charging stations are very fragmented in nature and there's not an actual count, and that can only come with better infra, can only come with better penetration, but right now the EV penetration is just at 7%.
Well, talking about, what the government could do to take these initiatives forward, we have seen, talks on green highways by Mr. Nitin Gadkari as well, to have more of a establishment of higher EVs going forward. Apart from that, we've seen a continuous improvement in the battery technology as well. Starting over the last 5 years, we've seen an enormous improvement in range as well as, battery capacity going forward as well. We've seen multiple ranges from 2 gigawatt all the way to 6 to 8 as well now. And with the onset of green highways, and we've seen, for EV cars as well, that's been one of the key beneficiaries. Specifically, when you look at the FAME 2, which was one of the key schemes which promoted the e-two-wheeler specifically, 10,000 crores was the outlay for that, extended until 2024. Now, despite seeing a 50% reduction in the new EMPS scheme, we have seen the sales haven't been that deterred for the top 4 makers. If you just take an example of Ola, they've seen a 60% growth in sales in the Q1, which just ended June 30th. Versus the same time last year, despite a 50% reduction in subsidies. We see that, there's also a tax benefit for electric vehicles at just 5% versus 28% for commuter bikes. And going forward, we see that the government's impetus on electric vehicles will be maintained and this tax benefit will continue as well. But, there are some initiatives for ICE, I guess, if you want to talk us through that as well.
Yes. But before I get into that, I want to talk about the EV bike category, which has just been announced. It's a niche category. Like you said, Ola Electric has announced it. But we need to know that scooters account only for 1/3 of the two-wheeler market. And two-wheelers are widely used by men and women. And there's also kind of consumer preference when it comes to two-wheelers versus motorbikes. And when you talk about, a motorcycle, which is an EV motorcycle, right? Petrol and diesel motorcycles have a higher range in terms of, how long they can go. And EV batteries can only do that with higher battery capacities, but this could increase their costs.
Well, for EV specifically, we are seeing that it's becoming a category creator. Now, Ola has launched their 3 new models under the Roadster platform. And we have seen that, specifically the Roadster X, which is priced at just 75,000 compared to a 100cc bike, which might be costing around 82,000 for something like a Splendor. Now, that's been one of the key things now. Ola is trying to create a market here, which is also getting into a new customer that's not been tapped before. We also see that, the total EVs, two-wheeler EVs, the two-wheelers sold last year were about 1.6 crores. Out of that, 1.2 crores were about the total bikes that were sold. So that's the segment that, Ola is now trying to capture in, get in a more base that's not been tapped before. And, apart from that, if we just talk about Hero MotoCorp, they sold roughly 54 to 55 lakh vehicles last year. Most of them were in the 100cc space. So going forward, we are seeing competition also increase in the EV space. That will also help grow the electric vehicle basket as well, and take forward this particular discussion to.
Yeah. But when we talk about that, we have to focus on financials. At the end of the day, Ola Electric is still a EBITDA loss-making company, while all the other companies that do manufacture petrol and diesel are making profits.
Well, specifically for EVs, we have seen that the loss in Q1 has come in. But for Ola specifically, we have seen the gross margin has expanded by 870 basis points. That's been one of the key things to watch out for. I also just want to end this discussion with the valuation picture specifically for, what it looks like for Ola as well as the others. Specifically, we have seen Mika wants to talk about the EV to sales ratio, which is very high for something like an Ola Electric. But do note that going forward as well for valuations, the company has increased the sales from just 10,000 to 3 lakhs in a couple of years. And going forward as well, the profitability will come forward as well.
Let's not forget that while we are talking about EVs, petrol, diesel, we also have CNG into the equation, which has completely, opened up another segment overall. But Puneet and Mika, thank you so much for joining us and taking us through that very exhaustive as well as insightful take on how the markets could pan out. Brijesh, we just about 7 minutes to go. Your buy today and sell on Monday calls?
Yeah. So as I've already gave you a GAIL, now there are 2 more buy calls for the BTST. Since market has already moved up, and when we started the show, it made a low of 24,470, and till now the high was 24,563. So roughly around 90 points around the Nifty has already made it. For the BTST has been considered, then one can look out to buy cement stock, that is Ultratech Cement, look goods on the chart. 11,320 around the stock is being trading. So present rate can be used to go long with the stop loss of 11,180. Play for the target of 11,550 to 570. And second counter, as I have already given you GAIL. Even suppose someone wants to do like BTST, then again Ashok Leyland looks good on the chart.
Sounds good. Vineet, just one quick question before we thank you. From amongst all the businesses or stocks that have done very well of late, from a policy push perspective, ever since this news around ethanol pricing, etc., has come about, sugar as a bucket has turned around. Does it? I mean, it's a largely tracked trader-friendly sector. Are you constructive here?
It gives too much disappointments. There are too many moving parts out here, international pricing, the rainfall, etc., etc. But having said that, we are going to be having a very good crop this year. And that lends credence to the fact that, we are going to have some bumper crop, which will ease the situation between sugar and ethanol allocations. So to that extent, I think the sector could do well for the short run, that is for another 6 months.
Okay. Vineet, we'll leave it at that. Thanks so much for joining us today and giving us your perspective. Vineet, I don't know if Agam already asked you, but if not, I'd love to know your top BTST. Is it that oil and gas thing, or is it something else that you would recommend? Brijesh, rather, sorry. Vineet, thank you for joining in. Excuse me for posting a BTST question. We will let you go. But Brijesh, is it an oil and gas name or is it something else? Your top BTST?
So Niraj, I have already given a GAIL looks good on the chart as a BTST. I have given at 232, stop loss of 227, play for the target of 242. Even short-term bet as MGL also I told you it's look good for the 2000 if someone wants to go for a short-term bet is been considered. If even for the BTST at 1817 around the stocks trades, keeping a strict stop loss of 1795, one can look out to buy and play for the target of 1850 to 55.
On something like the DLF as well, it seems like we are seeing strength return when it comes to a handful of this real estate sector companies too. DLF specifically, how is this one looking on the charts now?
See, it has a nice support at in the range of 845 to 855. Even I was looking for the BTST, but since if you look out the hourly chart, it has made a evening start candlestick. So at around 855 it comes, then one can take a buy call in it with a stop loss of 840 and then play for the target of 890 or 895. So right now for the BTST I don't prefer, but if it comes at around 855, then definitely with the stop loss of 840 one can play on it.
Brijesh, we'll leave it at that. Thank you so much for taking the time out. We'll monitor the oil and gas post closely on Monday to see what kind of gains are made. But let's start wrapping up the markets. 2 minutes left for the markets to shut shop. And not a bad day at all. 1.6% higher. It's a trending day. Almost a trending day from the lows, if you will. And closing it at the high point, which is actually a really good sign. Banks participating. But IT really doing the bulk of the percentage gain. 3% for the Nifty IT. Strongest day in a lot of days. And the heat map will show you very quickly. Just look at the gains out there. 2 or 3 stocks in the red. That's it. And IT ruling the charts. Wipro, Telecom, TCS, HCL Tech. Almost everything in the green. But banks too participating. And when so many stocks participate together, just before Agam comes in for the broader end of the spectrum, the weightage of the Nifty 50 movers. And you will see banks and IT. ICICI Bank, HDFC Bank, TCS and feed up. That sums up the day's trade. Agam, suffice to say, good participation from the broader end too.
There's no doubt about that because the mid-cap index is now outperforming the benchmark. This is up by nearly 2%. It's the same for the small-cap index. This is up around 1.7% too. And even in the broader markets, it's not just about earnings. There are plenty of stocks out there which are, in fact, advancing on the back of, several other aspects. Uflex right at the top of that list, making an up move around 20%. Polyplex Corp, look at that one. I'm sure that there must be investors waiting for maybe 2 or 3 years before you've started seeing that recovery, and now we're looking at a 9% up move there. Nippon Life, again, is the same story. After a handful of years, with a lot of weakness, suddenly you have an up move around 7%. Zensar Tech, Emphasis, also on account of that IT sector doing well, and Piramal Enterprises looking at a little bit of a U-turn after severe weakness that we saw last Wednesday. On the losing end, you don't have too much, but sure, Hindustan Zinc. And besides that, we have Varun Beverages and Adani Energy and Rajesh Exports looking at a little bit of weakness. But all in all, it's a day when broader markets too have done very well. Very quickly, if we can take a look at the advanced decline ratio as well, because that will give you a clearer picture of how markets have done. And there you have it, about 1,500 advances for nearly 600 declines. I would say roughly 3:1 ratio. That, of course, is always a big positive.
So great day to end the week. Hopefully we have the momentum continuing. But for now, from Agam, me and the team that put this show together, thanks so much for watching.